So we've done question 39. I would like very much to attack question 40 next. A company receives rent, big word that, in one sense, receives rent. So would you agree it's your income? Therefore, it's income. Receives rent from a large number of properties. The total received in the year ended 30th of April 2006 was 481,200. The following were the amounts of rent in advance and in arrears at those dates. Rent received in advance, hold on a second. Rent received in advance, so we've received today rent that belongs to next year. So would you agree, as at the end of this year, we actually have a liability to provide an economic resource or whatever to someone else? So if someone has paid us in advance, we actually have a liability at the start. So let's have a look at this again. From our point of view, we've received the money too soon. So at the start of the year, we owe something to someone. So that's the general concept. Now, that's at the start of the year. At the end of the year, there's another received in advance. Rent in arrears, all subsequently received. So obviously, if someone hasn't paid us at the start of the year, we actually have an asset. Is that true? So that needs to come in. What amount of rental income should appear in the company's income statement for the year ended that date? So assuming that there are no bad debts, of course, all subsequently received. So how do I do something like this? I suppose the safest thing will be to open up a little T account and run with that for a while, opening balances. Don't forget, in accountancy, whenever you have something at the end of the year, let's say in advance, it appears on the wrong side of the account, so to speak. So that's the only little trick to look out for. Otherwise, a very, very straightforward exercise. I could almost mentally do it, but maybe not wise. Let's commit ourselves to paper as we write something down. But really, you expect something like this in every sitting. Every time there's an exam, you expect something. You must expect something like this. So what should I do? Set up a nice T account. What else? The important part of our exam, all these little T accounts. Rent, income, debit, credit, right, let's start. Company receives rent from its large number of properties, so it's income. The total received in the year ended, okay, 2006. What year end are we doing? April 2006 was 481,000. There are some opening balances. Maybe I should bring the opening balances in first. There is something received in advance, 28,700. I think that should be on this side, because that is in advance brought down. In arrears, oh, by the way, if there's something in advance brought down there, and then at the end of the year there's 31,300 in advance, I'm going to say down here, in advance carried down, is 31,200. So do you notice that even though in advance it's a liability, and liabilities, of course, are credits, when it comes to the closing balance, so that's the opening, this is the closing. Obviously, it is still a liability, but it appears above the line on the wrong side. Obviously, this comes down here and starts up the new year rather like the first one did. But this is obviously at the start of this year. The other one is at the end of the start of the next year. Okay, so that's 28,700. No problem with that. The rent in arrears, I suppose, should be on this side. Brought down 21,200 in arrears, brought down is, or arrears I should say, carried down because it's above the line, 18,400. Clearly, they also say that the amount received this year was 481. So if you debit cash credit this, it should balance the books, 481,200. And so that's the cash received, you see. Debit cash credit this. So that's 481,200. And so if you add up the two sides, the side on the right looks comfortably heavier. 528,300. 528,300. So that, on this side we have the income statement, therefore equaling 475.9, and that is item number D, I believe. Yes, it does feature in our list of queries. So don't forget, these things always come down to the right side below the line, but above the line they appear to be on the wrong side, wrong in inverted commas. Okay, so in arrears is definitely our opening asset. Here, closing asset on the wrong side. So quite important to understand that if you have something in arrears, meaning someone hasn't paid you, you see, in arrears, it should be something like an asset in your books. So I'll say asset, and so on. And of course, at the end of the year, it appears on the wrong side. So don't forget, if someone hasn't paid you, you have an asset. If someone has paid you too soon, you have a liability because you owe that money back. Let's suppose you stop renting. You've got their money, but you haven't rented the property to them. So they need to get repaid. So it's a liability in your book. So don't forget that. However, we've managed to get to our point D without too much trouble. And so we move back to our D and indicate, in fact, that it is D there. And so we move on and on. Question 41. Annie is a sole trader who does not keep full accounting records. The following details relate to her transactions with credit customers. Might underline that, credit customers and suppliers for the year ended 30th of June 2006. Trade receivables, trade payables, and so it goes on. So my instinct, like yours, is to put everything down and just work through it like a machine without thinking. But a bright student will stand back and say, I wonder what's relevant to this particular question. What figure should appear in Annie's income statement? Okay. For what? It doesn't say for sales, just purchases. So my immediate reaction is stand back from anything to do with receivables. So I'm going to tick off payables. It's relevant. Stick that off a bit better. That's relevant. Customers don't like that. 302 looks good. Suppliers. Discount allowed. Discount allowed by us. So that's not good. That's something to do with selling. The 2,960 is discounts received. That's fine. 2,000 is fine. 84,000 is fine. Trade payables. So all the others are not acceptable. Not that, not that, not that, not that. So we've got to bring in 5 items and leave out effectively 4. So what do? I bring them into a nice big account. Do be careful, the opening balance, closing balance, etc., usual rule. This is opening. This is closing. Obviously, I want the second of those two things. Trade payables only. What figure should appear in Annie's income statement? Clearly, the only way I can do that is by doing a big T account. And it is to that we now turn our attention, as indeed we've been doing for the last little while. Question number 41. Purchase or payable control account what do? Leave out key concept. Leave out the debits credits, by the way. Leave out all sales receivable type information except for contras. Leave out all sales and receivable information except for those contras. Right, let's go. The dollar signs, etc., if you want to bother with those. The brought down trade payables is 60,000. Payables, of course, are credits, so the opening balance should be on the credit side. Don't forget that. Right, what else can I say? As I come down the page, I notice way down, there's a balance carried down of 84,000 that's required in due course. So I'll then tidy up by saying that looks to be the closing situation. So that's the opening balance under control. Don't forget, when you do your closing, it always comes down to the correct side. That's correct, but in a sense, this is the wrong side above the line, and this is the correct side. When I say wrong side, it's just a convention in accounting. You bring it in on that side, then you come down to the other side, etc. So that's the way it works. Right, let's fight our way to the top once more. As always, I'm doing these questions very slowly, trying to explain everything I possibly can to deepen your understanding. So here we are. A sole trader does not keep full accounting records, so she wants your help in working out this crucial figure called purchases. So what else do we have? As we work down the list, cash paid to suppliers. I suppose I'm crediting cash because I'm paying it out. Assets going down. Credit cash, debit this. So let's say cash account, 302,800. Cash paid, excuse me, cash paid means credit cash, asset going down, debit this. What else? The discounts received, 2960. So that's the discount received account. I suppose I'm crediting the discount received because income is a credit. So if I credit that, I debit this. Credit that, debit this, double entry. Okay, so if you're sure of the other one, then this one's right. We're sure of this one, the other one's right. But one of the two halves must be understood by you. And that's the way I do it. If I'm sure of my debits and credits, I can bring everything into the right side. And so we can tick that off in a sense. Contra. Contra. I would say contra should be on this side because you're cancelling some of this really, as indeed some of the purchases. So eventually you'll have an income statement purchases on this side as well, equaling something or other. So that too you're trying to cancel. So this contra is cancelling some of this, and some of this. Okay, so the contra is cancelling some of those items. So where are we with all of this? The 2,000 is some kind of contra between payables and receivables. So if I say receivables ledger, control account, contras, equally in the receivables control account over there somewhere, I would be crediting it, I suppose, and debit this, etc. So there you are. So do be prepared, of course, if the examiner says to you, typically, what's a journal entry for a contra? Is it this one? Is it this one? Is it this one? Is it this? Something like that. Different entries could be part of the challenge of the question, where you're asked to do journal entries and choose between several on offer. So by doing a T account exercise like this, slowly and understanding every word of it, it just gets you nicely prepared for journal entry type questions. All right, so here we are. If we can add up the debit side, we find ourselves on 391,760, 391,760, and so the difference between that and the 60,000 higher up the page is clearly the 331 type figure I am looking for, or at least that is apparently what the answer is. So I've got some opening balances plus some purchases. On the other side, I've got some cash paid, discounts received from the suppliers, so that reduces the amount that I have to pay. And clearly it must be on the debit side, as if I've paid, I suppose. And then the contra, similarly, the supplier is also acting as our customer. So we've bought some goods from the supplier, so we owe them money. At the same time, they're acting as our customer. So rather than sending checks up backwards and forwards, if you remember with the contra items, what you do is just send an email or a text or whatever it might be, probably an email or a letter or something, to say, let's call it quits. A phone call even would do it. But backed up with some evidence in writing would be better. So balances are always on the wrong side. Don't ever forget that. By the way, does that add up? Stop the tape now and see if it does. Should be all right, really. Wrong side. So there you are, the various items under control. I believe the answer there is A, which is the purchases for the year, 331,760. which is there. So that's the answer number A. Not bad. Let's go back and see if we can catch up with our answers here. Question number 41 is most definitely the answer A. So that was quite tough, took a bit of time, but I deliberately spent a few extra minutes for obvious reasons. Let's now move on to question number 42, I suppose, another quite searching examination of our skills. So on we go. Question number 42. The bookkeeper of Field made the following mistakes. Good, we know they're mistakes. That's a good sign. Discounts allowed 3840 were credited to the discounts received account. Discounts received of 2960 was debited to the discounts allowed account. That's quite complicated, I think. So I think we've got to have to make sure we don't get lost by writing something down. And then we can just think about it and say, the question, notice it says journal. I was warning you a few minutes ago that journal entries could be examined. You can see here quite searching, especially where there's a suspense account in the background as well. So let's have a go. Question number 42 suddenly takes up a lot of time. As I say, don't worry about it. There will be something elsewhere in the exam that balances the book, so to speak, in terms of time needed. So there are a couple of quite demanding questions, one after the other, unusually so. Unusually demanding. Question number 42. The following mistakes, so at least we know where we stand. Let's say there's a trial balance with debits and credits and dollar signs. The discount allowed is 2960. So it's actually a discount received, but was debited to the discounts allowed. Discount allowed, of course, is a debit, 2960. Meanwhile, the one before that, discounts allowed 3840 was credited to the discounts received. So on this side, I've got a discount received of 3840. So that's been credited. So I suppose our discount allowed has been debited with too little. It should have been. So the upshot of all this, the meaning of all this, discount allowed, debited with too little, one could say, by 3840 minus 2960, something like 880. And discount received is too much by the same figure, I suppose. So how do I correct all this stuff? If my discount allowed has been debited with too little, what I need to do, I suppose, is debit my discount allowed with 880, and then I debit my discount received with 880, because that's been, a discount received is usually a credit, and it has been overdone by 880. So if I've got too much of a credit of 880, what do? I just debit it, I suppose. So that's the debit, and the credit goes to suspense, one imagines, of 1760. So even though you haven't got a big suspense account story in front of you to deal with, all you can say is, this must be right, this must be right, And if those are on the wrong sides and the wrong figures, etc., the suspense account earlier was debited because all these caused too much of credits and so on. Or shall we say we need to credit the suspense to balance the books and, of course, to get rid of the old suspense balance. Is there anything? Yes, there is. Point number B. So that's part of the confirmation where it's very complicated as here. But notice that they all seem to have some kind of a case, especially the point A. Alternative A looks very tempting. Indeed, all of them are quite tempting. So B is the answer here. Now, I had to stop and think about that myself, I must confess, after all these years of teaching this. So sometimes there are some odd points, because some people are so good at this computer-based exam that they need really to be made to step back and think about the odd points. So the examiner does put in one or two that are nasty, and this one probably falls into that category. It's easy to get lost in a question like that. Where exactly am I going? But let's face it, 2 marks is not a disaster if it goes wrong. 2 marks, who cares about 2 marks? You're still well up in the late 90s. So that should be fine. So back we go. Question number 42. Point number B is where we are there. And so we march on to question number 43 when you're ready. I might ask you to stop the tape now, actually, and see if you can run through that question 42 once more, especially the working section. Which of the following statements are correct? Question number 43. So they're asking us to mention which ones are correct, so be careful. Materiality means that only items having a physical substance must have material in them. That doesn't sound good, is it? That's nonsense. Having a physical existence may be recognized as assets. In other words, something that you can touch. The substance over form convention means that the legal form of a transaction must always be shown in the financial statements, even if that word is wrong. The whole idea of substance over form is that the commercial reality, the economic reality must be reported rather than the legal form. Let's say, for example, you hire an asset from me, and the terms of the agreement are that in a little while you can actually buy it outright. And you're the only person who's going to be using the asset during its lifetime. So there's an asset here, a motor car, whatever it might be. You pay me a small deposit today and you take possession of the car. I'm a bank, perhaps you're the person who's using the motor car. So you pay me a deposit over the next 5 years, you pay me some installments. At the end of the 5 years, you pay me the last installment and you can take the legal title. Obviously, until you pay me fully, I'm the legal owner. But yet the fact of the matter is you took possession of the car, motor car, whatever it might be, some asset, and you used it in your business. I don't want to see the car anymore. All I'm living on is the interest, a bit of profit maybe. So the fact that you haven't paid me and legally I'm still the owner is irrelevant. The fact is you have taken possession of the car and you're using it as if it's your asset. So the commercial reality is that it's your asset, even though legally it's mine. You see that? So the commercial reality, the economic substance is more important than who owns what. And for that reason, that asset is yours. It's on your books, you depreciate it, etc. So that's substance over form. So we never go for the legal form, or most of the time where there's a dispute, we always go for the substance. So that's wrong. So they've got that the wrong way around deliberately. Which of the following statements are correct? So the last one, the money measurement concept is that only items capable of being measured in monetary terms absolutely fine. So I reckon the answer must be 3 only. How long did that take compared to, say, the previous one? So that's why I say never worry about the odd little point being a little bit slow, because there's always an opportunity to catch up within a few minutes, within a couple of questions' time. Here's another one. As we move on, question number 44. The total of the list of balances in Valley's payables ledger was 438,900 at 30th of June 2006. This balance did not agree with the Valley's payables ledger control account balance. The following errors were discovered. So I'm going to underline the word errors. I see. Errors were discovered. A contra entry of 980 was recorded in the payables ledger control account, but not in the payables ledger itself. Right, so the total of the list of balances in the payables ledger, that's the individual little T accounts for every supplier, is 438,900. A contra entry of 980 was recorded in the payables ledger, but not in the was recorded in the payables ledger control account, but not in the payables ledger. So I presume that must come into the list of ledger balances as a deduction. The total of the purchase returns daybook was undercast by 1,000. So you can put that into the purchase ledger control account if you wish, but it doesn't really help our cause because it says what amount should Valley report in its balance sheet, SFP, Statement of Financial Position, as accounts payable. And then finally, there appears to be a transposition error. An invoice for 4344 was posted to the supplier's account as 4434. So there's a transposition of 90. So that's the final exercise, the final point in our three-point exercise. So let's have a look at how one might go about doing something like this. Question number 44. So we have two things to worry about. We have our list of payable balances, that is to say, all these little T accounts added up. That's what this means. So the total as per the list is 438,000.9. We need to take away from that, not in the payables, it wasn't in the payables ledger, so I suppose better take it away, contra to the receivables control, one imagines. Basically the contra hasn't gone through. Contra to receivables, customers. The supplier acting as a customer. And of course the 90, which is a transposition of figures. Transposition of figures. So what's going on here? Invoice for 4344 was posted to the supplier's account as 4434. So I suppose the 4434 minus the 4344 sounds like an invoice. It's not a payment as such. It's something that we were charged by our suppliers. And so when we posted it to the supplier's account, we charged them with 9, or we put it in as a liability to them in our books by an extra 90. So that liability, remember all these are liabilities, credits are liabilities of course, liability, payables, credits, etc. That liability must go down by the overstatement. That is to say 90. So the answer here is 437,830. And that is the answer D, I believe. Yes, it is, 437,830. You can do your 1,000 returns daybook type item, put that in under your control account, purchase ledger control account, but actually it doesn't help because you haven't got the proper balance for your control account, so the 1,000 is irrelevant. Irrelevant, obviously, to what we are trying to achieve here, which is naturally the list. So the list is 437,830 as we go back to put that into place. So let's do that. Exactly that. Let's go back. So point number D is the answer there. And so let's march on to the next challenge. Question 45. Which of the following statements are correct? A cash flow statement prepared using the direct method produces a different figure. Absolute nonsense for operating cash flow. Of course it's the same figure. Rights issues of shares do not feature. Of course that's nonsense because cash comes in. Of course cash comes in with rights issues. A surplus and revaluation of a non-current asset will not appear as an item in the cash flow statement. Yes, I'll go for that. I'll say that's correct. Will not appear because naturally the revaluation may be needed in your workings to isolate, to work out what the actual cash purchase was. But as far as the cash flow statement is concerned, those words are correct. A surplus on revaluation will not appear as a surplus within the cash flow statement. To that extent, it's perfectly correct. Point number 4. A profit on the sale of a non-current asset will appear as an item under cash flows from investing activities in a cash flow statement. Operating, investing, very close, except for the bad word profit. As you know, it's not profit, it's proceeds. Proceeds, not profit. So I suppose to that extent that figure is wrong. So out of 1, 2, 3, 4 is just this one that's okay. So I think I shall have to go for point number C. And notice how quickly I did that with all the explanation. It only took a couple of minutes. So in the exam, inevitably, these 2 markers, some of them will balance out the more serious-looking complications, the bigger questions. So let's march on to the next challenge, question number 46. Gareth, a sales tax registered trader, purchased a computer for his use in his business. The invoice for the computer showed the following costs related to the purchase. I see. Computer, additional memory, etc. How much should Gareth capitalize as a non-current asset in relation to the purchases? That's all right. Computer looks good. Additional memory looks good. It's an improvement. Delivery looks good. Otherwise, you wouldn't be able to use it. Indeed, the installation falls into that category as well. Maintenance, no. That's wrong. That's revenue expenditure. So capital expenditure goes into your non-current assets. Revenue expenditure, of course, gets written off to the income statement. So that's not acceptable. The sales tax, interesting. You can't capitalize sales tax. So I'm going to put a cross. I'll explain in a minute how the journal entry works. Since it's suffered by the company. And so even though it's added, and so the cost of your asset goes up, you can't bring it into your books because it says capitalize as a non-current asset. I think what I shall do at this point is explain to you how this works with regard to a journal entry, and so it'll give me an opportunity to explain the debits and the credits and the reason why that sales tax doesn't come in. So if you like, the answer could be 1040 minus the 25, which allows me to bring it through to point number D as the answer, which of course it is. Now, I could stop there in the exam, obviously that's it, but if you need me to explain why I dealt with the sales tax the way I did, in case it comes up in a more searching way, I'm going to take the liberty of spending a few minutes with you explaining how all this works. So, question number 46. So we are making progress towards the 50 somehow over the last little while. So Gareth So suppose the question gave you several journal entries and asked you to choose. Okay, so suppose question gave you several journal entries, like one of our recent questions a few questions ago, gave you several journal entries and asked you to choose. Let's say question number 42. Asked you to choose, e.g., question 42, in this very exam from the same examiner, ACCA examiner. So several journal entries and asked you to choose. What you would do in this case is you would debit, in real life, the computer account with 1015. Is that all right? 1040 take away the 25. So that's nothing but 1040 minus the 25. So that's fine. Debit the sales tax receivable, recoverable account 182. You see, you suffered it, but you can recover it. So rather than debiting it to your computer account, that's wrong. You're going to debit it to your recoverable account. It's just like receivable. I'm also going to debit my maintenance account with 25, and then we're going to credit the payables, or bank, as the case may be. It doesn't really say whether it's been paid or not, with 1222. That is strictly what has happened. The maintenance, of course, goes to the income statement. So if you add the 10155 5 and 27 and 5, 12, 1 and 1, 2 and 8, 10 and 2, 12, 1 and 1, 2, if you add the three little debits, you should be equal to the credit there. And so that doesn't look too bad. You can't capitalize sales tax, basically, instead of debiting it, because otherwise you start, if you bring in the 182, of course, if it's not recoverable, some special circumstances and so on, then of course you have to add it in. But remember, if you can recover it, you might as well recover it immediately, all of it. And so you can offset that against any sales tax that you have to pay in terms of, purchases, more like a purchase tax. So if you add that to the computer, you see what you might end up doing is depreciating the sales tax, which doesn't sound right, does it? So you've got to recover it immediately. So that's the reason why we go for 1015. So let's flick back to this. I think we've just about underlined that. That's good. Now let's march on to the next challenge, question number 47. One other issue I have, of course, is as we're doing all this, there may be something that comes up in question number 50 or 49 that slows me right down. So I've got to keep a couple of minutes in hand, 5 minutes in hand at least, before we look at all of that. So let's have a look at question number 47. Keep fighting till the end. Don't give up. Keep time aside. Keep developing a small credit in terms of time to questions, that kind of ratio. A and B are on partnerships sharing profits and losses in the ratio of 3:2 respectively. Profit for the year was 86,500. Good stuff. The partners' capital and current account balances at the beginning of the year were as follows. Current accounts, capital accounts, all that kind of thing. So I'm going to say 3:2 right on top. That is 3 and this is 2. 3:2. Current accounts, capital accounts, all given to you. As A's drawings during the year were 4.3 and B's were 2.430. So I'm tempted, obviously, to do A and B, current, capital, drawings, everything. See? I feel that I'm in control. After all, I'm an accountant. I've got to keep in control of everything. Be sensible, though. All you're trying to do is get 2 marks quickly. So only answer the question that you've been asked. Don't put down all your knowledge. What should we underline A? A's current account, not B's. Who cares about B? Only A. So let's underline that. A's current account. I see. Current account, not even the capital account. So can I say A, not B? Current, not capital. See that? So how should we do this? What I'm going to do is to open up a little T account, making sure I don't waste time, of course. So whatever you think suits your timekeeping under exam conditions. So I'm going to do a few workings as we have been doing over the last little while. Question 47. A and B are on partnership. So let's do a nice big partnership current account. But I'm going to confine myself to A's current account. In the exam, most students will be doing capital accounts, current accounts, A, B. What you must do is only what's required. Only what's required. So is there a brought down of 5.7? Is it on the credit side, it seems to say? Balance brought down. Do I do B? No, just A. 5.750. Capital accounts, interesting but irrelevant to a large extent. There's no interest on capital, so the interest in the capital account is 0, if I may say so. Not interested. The drawings during the year were 4.3 and B was, careful, drawings is 4.3. So, as you remember when we did our partnership session together, towards the end of the main course, before we started revision, this is obviously the revision phase, 4,300, so that's fine. The profit share was 86,500. So obviously my other concern, the other concern I have is, does the drawings affect the profit? Definitely not, because drawings is money that's taken out. Profit, of course, is profit for the year. So the profit is absolutely fine. The profit share, the profit shared is 86,500. And if it is 3:2, I'm going to multiply by 3, divide by 5. On the grounds that 3:2, 3 plus 2 equals 5. You see that? 3 plus 2 equals 5. So 60% of 86, etc., is 51,900. And so if we balance the books, This is 57,650. 57,650. The difference, I suppose, is 53,350. And that's the balance carried down. Does that feature? Yes, of course it does. Point number D. So notice the skill, leave out what you don't need. So can I just request that you make a note of that? I was tempted, but I decided don't do B, don't do for B, and don't do as well the capital accounts for A or B. And the reason, of course, is not needed in the question. Only do what is required of you. Only answer the question that it's set, not the question that you like or the question you wish had been set. Okay, so there you are. That's the end of question number 47. But as always with these exercises, you can't relax because there are so many other things to trouble us. So let's go back and pop that in somewhere. We reckon that answer there must be D. So that's under control. So we move on to question number 48. Ahead of us is 3 questions. And so we must be careful with our time, inevitably, in the exam. So let me move on. Question number 40. What is the correct double entry to record the depreciation charge for a period? Almost without thinking, I can say debit depreciation expense and credit accumulated depreciation. The first one, of course, goes to the income statement. The second one goes to the SFP, or balance sheet. So the answer there is A. That didn't take long, did it? Whereas the previous point, of course, took a long time to do the detailed question that we were just grappling with, as indeed will be the next question. This is something about inventory. Inventory looks easy, actually, but you have to be a bit careful with that. A company values its inventory using the first-in, first-out type of method. I see. At 1st of May 2005, the company had 700 engines in inventory. Careful. Valued at whatever. The valuation figure is of some importance, of course it is. During the year ended 2006, the following transactions took place. Purchased 500 engines at whatever figure. Sold 400 engines. The first in, first out. So you already had in stock 700 units, you see. Now, you've sold 400, and then again you've sold another 250. So what I'm thinking to myself to say is you take away 400, you take away 250, so what's left is 50. So that's my opening shot. I've got the thing under control. First in, first out. So if I already have 700 units in my inventory, and then someone says we've sold 400 and we've sold 250, how much have we got left? Stop the tape now. Just have a little read of that question. I don't think I gave you a chance to read it in my excitement of getting it done. I apologize. Can I just give you a chance to read it so you get a feel for what is going on here? So am I allowed to say that the 50 that are left out of the opening total can be valued at 190 each? That's rock solid. So you can almost do it in your head. 190 times 50, is that about 9,500? If you're not sure in the exam, use a calculator. And then there's a purchase of 500 times 220, and another purchase of 300 times 230. One was 220, one was 230. And of course, as you add it all up, you can come to some kind of answer. Maybe I ought to write that down as a possible working. So here we are. All nicely set up. Question number 49. Nearly jumped the gun there. 49. First in, first out method. So we started with apparently 700 units, engines, whatever. We've then gone and sold off 400 engines. And then again we've sold off 250 engines. So what's left is 50 engines, and that should be valued at whatever price we started the year with, multiplied by 190, so that's 9,500. This is the proper dollars valuation, of course. Then you've got 500 purchased, paying 220, so that should be about 110,000. Then you've got 300 purchased, multiplied by 230, which is 69. And so you have the grand total at 188.5, and that should be somewhere featured. Yes, to our great relief, we see it there. So actually that sounds worse than it is, this first in, first out method. So it's not that bad after all. So let me choose to go for point number A. A company's motor vehicles at cost amounted to 30th of June is as follows. What opening balance should be included in the following period's trial balance? That's quite friendly, isn't it? So I presume it's this one. So that's what goes through as we choose point A. So that's a nice finish from the examiner, a bit of kindness shown to you because of the inventory figure that we've just been struggling with. So there you are, all these little exercises we have come to the end of. So how to brush up for the exam? Clearly, number one, read through all our sessions together, right through from the basic bookkeeping, the T accounting, the trial balance, extraction, depreciation, revaluations, all that kind of thing, the main statements. That's the first area. The other area, of course, is things like control accounts, suspense accounts with correction of errors, and of course the last mentioned, of course, bank reconciliation statements. Quite apart from that, you have sole traders, partnerships, limited companies, and that's really how our paper is made up. And on another level, you've got things like the ability to produce income statements, statement of financial positions, and of course cash flow statements. Then in the background, of course, you've got things like partnerships, limited companies, and so on. So be careful. It's a wonderful syllabus. I wish you all the very best in your exam. You cannot imagine what a privilege it is for me to be here to help you. Over the years, so many people have passed with me, but really I want you to pass on a one-to-one basis. So I hope I can help in some way for you to achieve your objectives and go on to greater things in life. So thank you so much for listening to my explanation. We've done the main course, and then I've done a few hours of revision. And so between the two, you should really get a very good mark. All the very best. Thank you for listening.